Hello, welcome to European Open Briefing for Tuesday, October the 2nd. I'm Rafi Bayajan, currency analyst at XM.com, and we're going to be having a look at what's happening in the currency markets today. The US dollar is extending its gains from yesterday when it surged on the back of that last-minute NAFTA deal. We also saw yesterday the Canadian dollar surging to 4-month high, and the Mexican peso also jumping higher. And in return, we saw safe haven Japanese yen pulling back sharply. But there is some risk-off sentiment this morning. This comes after a batch of poor manufacturing PMIs out of Europe and Asia, which has raised some doubts about the global growth outlook. We can see Asian stocks were mixed this morning. European stocks have started the day in negative territory, and we're seeing the yen making a bit of a comeback. The dollar index, though, has managed to rise to a 4-week high above 95.50. Dollar yen retreating from yesterday's brief climb above the 114 level to around 113.80 at the moment. European currencies are struggling. The single currency is down by around 0.35% against the US dollar amid ongoing doubts about Italy's budget plans. Sterling is also lower against the dollar. It's hovering around the 1.30 level, despite the fact that there are some developments on the Brexit front, which could potentially mean that a deal is getting closer. If you look at the commodity-linked currencies, the loonie, the Aussie, and the Kiwi are all lower against their US counterparts this morning. The loonie, of course, is just easing back from those strong gains yesterday, but the Aussie and the Kiwi are down sharply. The Aussie is down by around 0.5% to around 0.7187 against the US dollar. We did have the RBA policy meeting earlier today. They kept policy on hold as was expected, but in its statement the RBA was a little bit less confident on meeting its inflation target, so that drove the Aussie lower as it potentially pushes out the timing of a rate hike even further into the future. The Kiwi did come under pressure earlier today from third quarter business confidence data, which fell to a 9-year low. If you look at commodities, oil prices extending yesterday's strong gains as those Iranian sanctions loom. Gold prices are up sharply this morning. Gold is up around 0.5% to around $1,193 an ounce, and we can see gold is also the best performer this morning, getting a lift from that risk-off sentiment that kind of got worse as we head into the European session. The worst performance are the Aussie dollar and the euro yen pairs. Looking at the dollar yen more closely now, we can see those 11-month highs yesterday above the 114 level. That was the first time it broke above 114 since November last year. The dollar index has hit a 4-week high of 95.58, and the loonie surged to a 4-month top of 1.2778 per US dollar after that NAFTA deal, which took most market participants by surprise yesterday, ending months of uncertainty about the trade outlook in North America, and that of course would be positive for all three economies concerned. But the set of poor manufacturing PMIs out of both Europe and Asia has this morning capped that risk-on sentiment. In fact, we're seeing more a deeper risk-off mood as we get into the European Open, and the yen is making a decent recovery. But if we'll stick to the dollar, what's going to be in focus over the coming days? Later today, we've got a speech by Jerome Powell, the Fed chair, and another one tomorrow. And of course, the non-farm payrolls for September on Friday. Let's move on to the euro now. We can see the single currency has been on a downtrend since late September. It's now fallen to a 6-week low, $1.1523. Yesterday, we saw the manufacturing PMI for the Eurozone dropping to a 2-year low in September, fueling doubts about Eurozone growth. In addition to that, we've got that, of course, concerns about Italy's budget, which was sharp. The 2.4% budget deficit being planned by the new coalition government is far above what the previous government had told the EU, and the EU isn't happy about that. The European Commission could reject Italy's budget plans if the Italian government doesn't set a much lower deficit target. And further making matters worse was a remark by a member of the Italian government, part of the Northern League party, who said that Italy wouldn't be having these problems if it had its own currency. That led to a big spike in Italian government bond yields, and in turn pulling the euro lower. And a quick look at sterling. We can see the sterling is struggling to hold to the 1.30 level against the US dollar. It's touched a 3-week low 1.2986. We've got UK Conservative Party conference underway at the moment, and so far Theresa May isn't doing too badly despite the pressures of her party. The big day, of course, will be tomorrow when she will be giving her key address to the party. There was some support for sterling yesterday on better than expected manufacturing PMI out of the UK, and there's some reports early this morning saying that Theresa May is planning on resolving the Northern Irish border issue with the EU by proposing that the UK stays in a EU customs union until a permanent solution to the Irish border issue has been found. But market reaction to that, there wasn't in fact much market reaction. Sterling is basically following the market mood, and in particular the euro lower against the US dollar. Looking at what's coming up later on today, it's going to be fairly quiet apart from UK construction PMI and the dairy bi-weekly dairy auction later on, as well as Eurozone producer prices, plus that speech by Jerome Powell. That's it from me. Thank you very much for watching, and have a great day.